Hi, this is Pat Moorhead with More Insights and Strategy, and we are finally back with another FinTech Friday. It is episode 6, and I'm here with my incredible and very smart principal analyst of FinTech, Melody Brew. How are you?
I'm great. How are you doing?
We talked a little bit about it. I have been, I've been better. I was battling an infection, but this is not, it did keep me from FinTech Friday last week. I was going to say nothing would keep me from this, but no, actually it did. And even having sucky bandwidth when I was out of town or out of the state last week. But it's Friday and I'm happy and I'm energetic and I love doing this pod with you.
It is fun. It's always the highlight of my week.
It is, and we have
Lots to talk
some
about.
fun topics, and you've been super busy going to a ton of FinTech events, but we're going to talk about cannabis banking. Cannot wait to get in here. Financial clouds and our acronym of the week. So let's just let's jump right into the high price to pay in cannabis banking. Boy, this sounds very provocative, Melody. What's going on here?
Yeah, so really interesting. I was in DC a couple of weeks ago, and I went to the PBC Conference, which is Payments, Banking, and Compliance in Cannabis. So imagine, this is a nearly $19 billion business just in the US alone, projected to be a $41 billion business in the next 5 years. And there's all these challenges and conflicts around payments and banking because of the federal and state regulation conflict. So, enough to have a whole conference built around it.
Oh, I'm completely and utterly shocked. And I did a Google search, and yes, there is, you're not making this up. There actually is a PBC conference.
Yes. And it's not, and so like let's back up a second. Like, no judgment here, right? Like, but I'm not a weed person. I don't really, I wasn't really sure what to expect, but I walked in there and there are senators, there are, policymakers, there are really like high level bankers, there are former CEOs of investment banks. And, you're not like, these aren't people who are, smoking weed and, and what you might imagine in the cannabis industry. These are serious professionals. And it was really interesting to see, what's happening in this business and the challenges that they face. And a lot of people that I talk to, they say that, they estimate that up to 80% of cannabis businesses are unbanked. So when you think about that, there's just so much fallout from that, right? Like, there's the cash risks, there's security issues. I mean, we hear a lot about that. Like, a lot of the dispensaries have all of this cash on hand, and they have all of this, the security that they have to pay for. They know that when people are paying with cash, that the cart size is limited. There are some sort of credit card or debit card solutions that the industry has come up with, that some POS services in the dispensaries are able to use, and they know that increases cart size by 30%. So there is a big issue here with the cash on lots of different levels. I think that one of the like banking solutions guys that I talked to said that less than 7% of financial institutions report banking cannabis related businesses. So they were less than 7% report that. So that means that probably maybe there's a little bit more, but what's happening there is that people are basically being forced to create another entity in order to have a place to park their cash. But even before that, like, think of all of the things that kind of trickle down in the banking industry when you talk about that. This is such a cash heavy industry. So that's payroll, that's lending, that is, even like someone who works in the cannabis industry who gets paid in cash, even if they're making 6 figures, they can't get a loan because they
Yes.
can't show where their money is coming from. Oh, wait, so go ahead.
Oh, I said I'm fascinated. I'm just soaking all of this in, and I hadn't quite even thought about this issue. But hey, that's why we have you here.
Yeah, well, anything that has to do with regulation and banking, I just geek out. Like, that's speaking my love language, right? But there are some really interesting tools that are coming up that are kind of trying to solve this problem. It's not going to be solved completely until there's an agreement of regulation on the state and federal level. But like this company, GrowFlow, which is, I love this term, seed to sale. It's a SaaS tool for managing seed to sale operations. And they basically, what they do is they track, because even on the state level, you have to track all of purchasing. You have to track where the money comes from, where, basically like everything in the supply chain has to be tracked. So that's really just setting it up for when it is legal on the federal level. And I think that will happen eventually. I mean, I'm not here to judge that, but everything kind of points to that's probably going to happen. That when that does happen, that the compliance is there, and that people can kind of, when that 80% who seem to be unbanked at the moment will be able to actually fall into the financial services market much easier. And then there are companies like this GreenCheck Verified. They actually work with companies like GrowFlow, banking solutions for the cannabis industry. So they have really this whole thing is just so fascinating, I think, because they have even harder compliance issues, of course. When getting a bank in the cannabis industry is hard enough, but then part of the reason why it's so difficult is because even though it's a completely legal business on the state level, even like a local bank or a credit union or something that is just a state specific bank, they have all of this compliance around FinCen compliance, which is the Financial Crime Enforcement Network. So it adds all of these layers of risk for them. So again, more expense. It has all of this layers of risk management. So it's just a really interesting problem that they're solving, and something to keep an eye on. I find it just super fascinating. And, again, it's something that has to be solved. And right now it's so costly, which it's really hard to avoid the puns, to be honest, when, you say like a high price to pay for banking.
I got a question I had a comment. We got a comment on Twitter that was like, hey, Patrick, does cannabis banking come with high interest rates?
I mean, there are high fees, right? I mean, it's going to happen. I think the benefit for the cannabis industry when this is more commoditized is that they won't be paying these crazy fees. Right now, they just have to. It's their only choice. So
yeah, this is fascinating. And by the way, I will add, again, I'm not like, a weed person either, but I do like the notion of taxing people on it. And once you get everybody banked, guess what? We can actually tax people like we do alcohol. So,
yeah.
And other vices out there.
Yeah.
So, hey, let's move to our next topic. And these are financial industry clouds. And maybe the way that I'll set this up, because, I personally, I guess, hey, I run the company, but I'm also the IaaS person. And I do a lot of SaaS too.
Yeah.
The public cloud has been out there for about 15 years. So S3 came on the scene literally 15 years ago. And that's viewed as how the cloud actually started. And as with everything, over time, through maturity, you get into segmentation, right? And that's what we're starting to see now with financial industry clouds. And I believe you even attended a vendor event as well.
Yes. Yeah. This week actually was AWS Financial Services Analyst Summit. So some really interesting things happening there. And actually, we'll get into kind of some of the things in our acronym of the week with cloud data management capabilities. And actually, that was kind of one of the reasons why I wanted to talk about this industry cloud, because obviously, you're the cloud guy. So Wells Fargo just recently made an announcement about their digital infrastructure strategy, and there are some partnerships with Microsoft and Google Cloud. And Wells Fargo has just been in the news so much lately with all the things that they're doing wrong and all of the problems that they have. And so I think that this is interesting on that level, that gives them kind of the security and everything that comes along with the cloud. I did talk to one of their analyst relations or PR people. They're not using the industry specific cloud for this, but that I guess is just in preview stage, the public preview stage right now. But they do plan on kind of rolling that out when the time is right. But we're seeing this with Amazon FinSpace and other industry specific clouds. Snowflake is one that has targeted financial services, and they're actually the first to become certified in this cloud data management capability industry standard, which we'll talk about. And I just think that there's some things that kind of come along with the structured evaluation of the data management. And I also just wanted to get your take on that, because I think is it necessary? What benefits does it add?
So I've got a lot of thoughts on that, and the needs of the banking industry are not the same needs as the food industry, which is different from even the manufacturing industry out there. And if nothing else, and I did do, I'm not the fintech person, but I did do a lot of research on IBM's financial cloud, and they're putting a much higher degree of scrutiny on security. Mm-hmm. So it is literally the next level. I wish I could regurgitate back the terms of the security, but I know they invested a lot in that. And the other part of it is you also have different SaaS providers, right? Who are different and unique to this industry. And that is one of the things that I thought was interesting about the IBM Financial Cloud. It looked more of an ecosystem to me than anything else, because they had 40 to 50 companies in there, financial companies that their software might run on a mainframe today, or an IBM Z, or an Intel or AMD server that you can swipe your credit card and have this. They co-developed this with Bank of America, and it's funny. We see companies like HSBC talking a lot about working with Google as an example, but the thing to really that I always have to get back to is these banks might have 10,000 applications, and it might be one or two or three applications. It's not the whole thing, or it's not half the applications, because it's going to be a long pull. I mean, if you wanted to get off of a mainframe, it would take you 5 years to get off of it. The other thing that I find interesting about these financial clouds is if you're doing any type of transaction that's governed by responsiveness rules, you can't just go down. I mean, if you're Google Maps and you go down, you're going to have some mad users, but you're not going to get fined for it, right? If you don't do a financial transaction in a certain amount of milliseconds, you will get fined by the government, at least in the United States. By the way, there's different rules in every country in the entire world that you have to abide by. So yeah, sorry to eat up so much of this time, but to me, it's this is the natural maturation of the cloud, which is we started off with these horizontal clouds for, I would say, somewhat simple types of applications, and then mobile applications, and then increasingly mission critical type applications. And having financial clouds pop out is I totally understand it.
Yeah, I actually heard somebody from Snowflake talking about it, and just building applications in the cloud, and just the data management and also the risk management for banking. That there's so much of the reg tech, the regulation tech that can be built in, that can sort of remove some of those layers of risk.
Yeah, I mean, the other tool that doesn't get a lot of discussion here, another vendor is Cloudera. Most banks use Cloudera for data management, and that's because you've got a unifying security regulation across the board, and even they've gone a hybrid cloud with connections. So you can go to AWS, you can go to Google Cloud, you can go to IBM Cloud, you can go to Azure as well. So you've got the big three that clients and banks can go to use their service if you're looking for an end-to-end data platform. Because Snowflake only hits one element of the data, and they're good at data warehousing, right?
Yeah.
And they're worth a ton of money, more than Cloudera. Why, I don't know, but there must be something there, and that's Wall Street. But no, we're going to see, there's Databricks, who's another element of the data pipeline of this. A lot of people who are in the stovepipe, and I like to look at, there's, edge to edge on data, there's probably 5 different steps required in there. I'm actually was very shocked to see Snowflake create this, just given the scrutiny and the heartache that goes with financial services. You screw up, you're going to get fined. You might go to jail, but have a nice day.
Yeah, good luck with that.
Yeah, exactly. But and very much related to that is our acronym of the week, CDMC. Tell me what this is, please.
Yeah, I was going to say, this is just like a perfect segue into that. So CDMC is Cloud Data Management Capabilities. So this is a new industry standard. And like I said, Snowflake became the first to be certified earlier in September. Just this past week, AWS, Google, IBM, and Microsoft just made the announcement that they were kind of behind this standard. It's an extension of another acronym, DCAM, which you probably know, the Data Management Capability Assessment Model, which is
it literally does roll right off your tongue. I
right?
mean, yeah.
I know. So it's just, the structured evaluation data management for all of this, when you, just like what you're saying, like we're talking about cloud, and then we're talking about even more complexity in the cloud when you whittle it down to financial services. So this, they're creating the standards around this, and for all of these companies to be behind it, agree on an evaluation method and sort of certification of these standards, and have it be, industry standard. I think it's great. There's so many things that we talk about that are like, okay, does this have to be government regulated, or is it an industry? Is it acceptable for an industry to come together and create standards that everybody agrees upon, that are good for everybody? And in this case, that's what's happening, and it seems to be, all these companies seem to be agreeing on it, and it works. So
it might be a dumb question. What types of things is it standardizing on?
So I think that mostly the standards are just on the data management. So how, where, the data is managed. I don't really know the specifics on that. Maybe something to look into. And
and this is and it's managed by, it sounds like somebody called the EDM Council.
Yes. It's funny. EDM Council has been around for a long time. I don't actually know what EDM Council stands for, and they don't. If you look on their website, I think I'm going to guess it's electronic data management, because they've been around for a while. But there's in no place does it actually say what EDM is. So I'm making that assumption.
Here we go. No, I think anything other than government regulation, and this is the Pat Moorhead opinion here, the less is more. I do understand that we have gotten ourselves into financial pickles before, because, listen, you give anybody in finance or fintech the ability to make money in a new way, they're going to find a way to do this, right? Mm-hmm. It also, caused some of the greatest crashes out there, whether it was the S&L crisis, Wall Street crashing in, the 1900s, and, back in the day in the 80s. I mean, a lot of our biggest crises can be funneled back into a lack of regulation. So I just say that out of the other side of my mouth. But if you can do it as a standards group, that's even better. I was getting kind of scared on CDMC, thinking it was going to be some IEEE thing, and it's not. That's kind of the last type of industry standard you want, because it's glacially slow. So it's good to see that this is a council, not necessarily an IEEE type of organization, to be able to do this.
Yeah.
Well, let's move. Oh, sorry, go ahead.
Yeah. Again, when you have consensus from big companies like AWS, Google, IBM, then I think that shows that there's, some agreement across the board on what needs to happen.
Yeah, it becomes a de facto standard because everybody's using it. So I just wish they would do that for data sharing. Wouldn't that be grand? One of the largest costs of any public cloud engagement is moving data around. And it's even worse if you try to move it across clouds. Now, there is a standard and a peering agreement between certain cloud players, Azure and Oracle, but nothing between AWS. There are no free lunches with the number one IaaS player out there. So anyway, so great stuff, Mel. FinTech never sleeps, and imagine that there's more coming out next week. What are you looking forward to?
Yeah, there's a lot happening. So I actually started doing some briefings with some Austin-based companies. Met with one company last week, actually, or this week, that we didn't even have time to finish everything, because it's really an interesting business, and we'll continue that, called Up Equity. And a couple of other Austin companies. And I also had a really interesting briefing from PayPal and Adobe Commerce this week on the partnership that they announced. And it really made me think about how payment options are becoming more important, not just like where you shop and what you're buying, but actually how you're able to pay for it. So that's kind of something that I'm really thinking about, and I've already actually started talking and asking some people who run their e-commerce sites and some CMO friends of mine what they think of that. When you look at like the PayPal and Adobe partnership, and Shopify now has their buy now, pay later options, and there's so much happening in that space. I also have a briefing with Zip next week. That's another buy now, pay later service. Because I'm really interested in this, how important payments are becoming in making a purchase. And I sort of have a thesis. I think that being competitive on payment options is going to be as important as being competitive on price and availability.
Gosh, it's amazing. It's like we're back in the 80s again. Stuff just goes around the circle. Do you remember Kmart?
Yeah.
Yeah, I mean, Kmart, like one of the big moves they made on JCPenney was the whole layaway thing.
Oh, yeah.
Anyways, there's nothing new.
Yeah.
It's all retreads, and if you, as you and I both know, you stay around long enough, you're gonna see it again. It's like my dad's old suits of the 70s. I'm like, throw these things out, and he said, Patrick, these things are going to be popular again in the 90s. Big lapels. Now, the orange color of the suit definitely did not come back in, but he was absolutely right.
The style comes back.
Yeah. My wife's favorite jeans are mom jeans now. Like, how did that happen? My daughters were mom jeans of 1986.
Oh, God.
Anyways,
I love to do it.
I'm so sorry I got us off of this topic, but no, let's try to knock it out Friday. This is the last 2 weeks have been on me, so I'm sorry, awesome audience, if you've missed us. But this does conclude episode 6 of FinTech Friday. I want to thank you, and if you have any compliments, it's at Patrick Moorhead. If you have any complaints, it's at Melody Brew on Twitter. No, I'm just kidding. We want to hear everything. But no, let us know what you like. This is available on all podcast platforms and YouTube if you're watching, if you want to see the video version of us, which I am sometimes say I have the best video for radio. But anyways, and I didn't even say the disclosure. This show is for educational and entertainment purposes only. We might be talking about fintech, but don't take what we say as investment advice. It's not. Get a professional like we have. Anyways, have a great weekend. Thanks for tuning in, and we will see you next.